Let's talk about why the housing market is in real trouble. And trust me, it's not why you think. And in fact, I haven't heard much at all about this major threat that could last more than a decade. So if you're planning to buy or sell a house over the next decade, this video is for you. So let's do a quick breakdown of where the housing market stands today. So I think there is one thing for certain, that over the next year, we're going to experience a mild recession, and in fact, many may believe we are already in one. And some leading indicators of that is that experts believe the unemployment rate will increase from about 3.7% to anywhere between 4.5% to 5% over the next year. Then we have high interest rates, which is leading to high costs of housing. With interest rates around 6.5% right now, and not expected to drop too much over the next year, maybe down to 5.5% to 6%, housing affordability has completely plummeted for most. And in fact, this graph here shows the percentage of income going to housing costs increasing dramatically alongside the increase of interest rates. And in fact, this graph doesn't even go on to show the last 7 months of data, which we've seen interest rates hit over 7%. And let me know down below as well, have you dropped out of the market because of high interest rates? As long as interest rates remain high, that's going to keep housing affordability low and compress the housing market demand. Then additionally, we've got housing listings dropping quite significantly. This is, people are not putting their house for sale quite as much as they were a year ago. This is not the best time for a buyer, so this is not going to be an easy time for sellers. In fact, many sellers now are having to offer concessions such as closing credits or other kinds of concessions. This is all to try to appeal to buyers that otherwise may not be interested. This is of course leading to days on the market to increase quite a bit as well. And of course, with all of that, that means sales are declining as well. If you have less homes on the market, generally you're going to have less sales as well. So with some of that data that I just went through, many may believe that we're going to see a major housing crash over the next year or two. And I think a lot of people are really hoping that we'll see some sort of 2008 style crash. So let's just talk about some of the differences between this current housing market and the 2008 housing market crash. Because I think that's important to understand before we get into this major red flag for the housing market, which I'm going to explain in a couple of minutes. So in 2008, we saw about 8 million job losses. In 2023, experts don't believe that we're going to see more than a 1 to 1.5% increase in the unemployment rate. This is significantly lower than what we saw in 2008. So this should be one of the leading indicators that this recession is going to be less severe than back in 2008. Another key difference between today and 2008 is in 2008, we had a major subprime mortgage crisis. But today, homeowners have more equity in their homes than really any time before. So there's really very few homes that are in that situation, along with lending getting a lot tougher over the last 15 years as well. This means that overall, homeowners are in a better position than they were in 2008. Another difference is today we have about 1.1 million homes in inventory, meaning homes for sale. Compare this to 2008 when we had over 4 million homes on the market. This means that even though demand has dropped, we still have a lot fewer homes for sale, so that's kind of keeping us above water. And then one of the last major differences is foreclosures. In the last housing crisis, we saw nearly 5% of homes in foreclosure. Compare that to this year, we've only got about 0.6% so far. And as I mentioned before, with so many people having so much equity in their homes, there's very little risk that we'll see any kind of major foreclosure crisis. Now that doesn't mean we won't see any increase at all, which we probably will, but it's going to be a lot less severe than in 2008. So now let's talk about the real threat to the housing market in 2023. So the biggest long-term threat that could really have a negative impact on the housing market is the major housing shortage. Now I'm not talking about a shortage of homes on the market. I'm talking about the shortage of homes being built. And this is something I talked about back in 2021, and it has only gotten worse since. Experts say that we're anywhere between 4 and 6 million short of newly built homes. In fact, NAR, the National Associations of Realtors, released a report saying that we're about 5.5 million homes short. And if we take a look at their housing shortage tracker, we can see where some of the biggest shortages are. And this could be a leading indicator of where the housing market may fare better overall over the next 5 to 10 years. So as you can see here, the Northeast, parts of California, and southern Florida are experiencing some of the biggest shortages of newly built homes. And even if we started more aggressively building today, it could take more than a decade to close the gap. And with the current stage of the economy and high interest rates, there are really no incentives at the moment for builders or investors to start building more properties. So it doesn't look like this number is going to close anytime soon. But NAR has suggested a few ways that could help close this gap. Things like zoning reform that could allow you to build multifamily properties in places that are only allowed for single families at the moment. Additional financing options, so better financing for buyers that either want to build a new home or use an FHA 203k loan for rehabbing a property that needs major work. And then there are other tax incentives that we could offer for low-income housing to be built. And so basically what all of this says is that the housing shortage is only going to get worse over the next year or two at minimum. And so this is one reason that I think the housing market is going to remain relatively stable over the next 3 to 5 years. And of course, this will definitely vary between markets. So not all markets are going to experience the same fate. So this is why this is a major threat to the housing market. This is going to keep home prices relatively high for current buyers and buyers going into the future. So barring any sort of catastrophe in the future, this is not looking good for buyers for the next decade. But I'll continue to watch these numbers and provide updates as necessary.